Race is the place that you learn markets retrace and don't chase, with a team that would be very difficult to replace. Looks like we have some ECB action going, traders. Warriors, how's everyone doing today? So, we held the bottom of the triangle yesterday before the ECB. So far, we've come off a convergence of these moving averages. If you're short, sometimes you get these ranges. This is a 1 hour. So if we circle back above 1360, I wouldn't be short. Might even want to consider longs. I still think there's some unfinished business here in the dollar. Again, your first sign that there's something wrong in the dollar is going to be 96.90, and of course, under these double bottoms here, 96.40, then it's a problem. But even though we charged yesterday, we failed to take out the high of the move. I think there's still at least one buy stop above 97.69, and yesterday's high was 55. So right now, the bears, the top pickers, are getting some hope. Maybe they're right. I'm a believer, because I've witnessed it, that anything and everything is possible every day. So, you're constantly assessing, reassessing what markets are doing, and you get new information. As W.D. Gans said, if you don't learn how to change your mind, you won't have any change left. So hold on to your nickels and quarters and pennies and half dollars. Don't lose that change. Learn to be flexible. I believe someone that I interviewed last week, it was Olivia Voznenko. I asked her, from talking to all the guys on the floor, the NYSE, what major lesson she's learned, including her own trading, and it's don't be stubborn. I've stubbornly held on to positions for way too long. Started off as maybe a swing trade or a scalp, then a position trade, and then don't become an investor. You become an investor by, not accepting that you were wrong and financing a position. And, the problem isn't only with the losing position that you're nursing or, financing. It makes it more difficult for you to take advantage of other opportunities. So you'll have opportunity loss because a lot of people, and I speak for myself, it's very difficult to take on more risk when you're buried or underwater on something. You guys agree with me? You want to wait and see if you're going to recover from something you shouldn't be in anymore, and then trade after trade, opportunity after opportunity will pass you by because you're really in a fight or flight type state of mind. Instead of challenging the markets have become challenging. So we're getting this little bounce here in the euro. Pound really exploded, but still under the breakdown. I'm sure the guys are going to talk about it. And you know what? The other day I didn't think it was going to work, but how about kudos to our macro guy? We all know who that is. Stelios, Sappy, Contos. How are you, brother? So, I'm trying to get to EG, and technically it sure didn't look like that was going to work when you took that position, but looking pretty good now. Here we are. Big move today. Nice candle. So, I know you're a position trader, but, could always, like what I teach, take a piece off at 89.5 or 89, and then, just sell rallies if this turns out to be the high. But great call by Stel on Euro Pound. Pretty scary up here to short. So pros, they don't have fear. They have a belief and conviction on a position. They go in and say, okay, Mr. Market, I've done my work. I've done my research. I like the price level. Prove me wrong. Okay, not I hope this one works. And I'm only saying these things because they flash through my mind. Okay, you can I've seen others. I've seen hundreds of traders over the years, and try and teach not only from my mistakes and landmines I've stepped on, but what I see others do. Okay, so this is a great fundamental day, so I'm not gonna, it's not my wheelhouse. So if I don't have a candle or a bar, and I'm not talking about, a bar that I need to go into to do Boilermakers, I can't trade. So maybe I'm just going to turn it over to Stel right before Blake comes on. And what's happening with the ECB here, Stel?
Hey, good morning, everybody.
Good morning.
ECB is actually tomorrow, but we've got some developments regarding France and Italy.
Okay. It's like me saying I'm going to stay out of cable until the Brexit vote, and they had already postponed it. I'm pretty aware of the news, aren't I?
You usually are, man. But yeah, we have first of all President Macron, Macron actually. Sorry, I have a coughing kid right next to me. But he, in response of all that's happening in France, he has basically announced some measures which are going to drive the deficit higher towards 3%, apparently. And if we all remember, Italy has been fighting to keep the budget deficit to 2.4%, and they've had a lot of disagreement from the EU. And we had the usual tape bombs today, where apparently they were going to suggest 2%, but then they denied it. It's just a mess, the whole thing. But this is what's been happening in the EU today. We have the ECB tomorrow, which is not going to change rates. But
let me ask you a question. It's kind of like the elephant in the room, and we've been through everything. You've been through everything in your home country, in Greece, and this to me to Italy is kind of like another magnitude. But what about? I mean, if France, so you see what's happening on the streets, and now what they're trying to do. It's always bad economics that creates social unrest, and obviously the government's not doing things right, or what they did in the past is coming home to roost. I mean, if there's a problem with France, that's going to be a massive problem for the ECB and the euro, don't you think?
Oh yeah, absolutely. Same with Italy. We're talking about trillion euro debts, and it is going to be a huge deal. And we've seen that the French, they're not taking things lightly. They take to the streets.
Yeah.
This is. I'm actually personally quite surprised by the complacency of the market when it comes to the euro. I thought it would be quite a bit lower against some currencies, but it's. I guess we're in a mode where the people expect that whatever needs to be done will be done. Draghi, whatever it takes, and we'll go from there. But like you said, there's a lot of huge inequality. I mean, it's a global phenomenon. And actually, I was reading about a couple of days ago, Christine Lagarde was giving an interview talking about inequality and how it should be fought and all that. And she was wearing, a 3,000 euro Chanel dress or whatever it was. And I'm like, come on, So anyway.
The hypocrites speak, don't they?
Talk to me about inequality in your Louboutin.
Hey, Steve, how are you this morning? So would you say that France still has even more euro debt than Italy, being a bigger country?
I need to check the numbers, but I think that should be the case. I know Italy has 1.3 trillion and
2.4 trillion.
Italy.
Yeah, double.
Yeah.
2.4 trillion is Italy. Now about France, I don't remember.
Oh, is it 2.4? Okay.
Okay.
Well, I'm guessing it's going to be $2.5 trillion. So there you go. It's roughly the same.
Okay.
And so hey, this is not Greece. This is a big deal.
Yeah, Steve. In case you didn't notice, Bitcoin's up $41.65.
Oh my God!
It makes you want to look for your mouse, huh?
Oh yeah, absolutely. I'm about to go on a binge buy in a buying cryptocurrencies.
All right, man. Yeah, I'll get you a wallet for Christmas. Only it'll be leather.
Really, the only thing I don't understand, and it makes zero sense to me, is why Bernie Madoff is in prison instead of running the finance ministry of any of the countries. In all honesty, at least he was much more capable in running a Ponzi scheme. Yeah. Because that's exactly what every single country is running at the moment, right?
Yeah.
Exactly.
Yeah.
Exactly.
Well, yeah. I mean, really, look at the word confidence. The first.
And that's the exact reason why I'm going long Bitcoin.
Are you sorry?
Joking. I'm joking.
Well, how about 2,800, Blake?
That was the argument for last year. No, 2,800 for what?
You know, for something you really don't understand. No, Bitcoin.
Yeah. No.
All right. Anyway, I know some Ellioticians that are trying to call a bottom here so far unsuccessfully. So their next number is like about 2,800.
Yeah.
I know
we're getting guys I follow.
I know that you're usually the person that gives the lines here, but as Blake used to say in the past as well, you know, whoever tries to pick bottoms gets smelly fingers, right? That's what you were saying, Blake, right?
Yeah, that's usually the case, pretty much the case. Yeah. So good morning, guys. Good. I just wanted to chime in a little bit before the CPI numbers. So,
Blake, the ECB is not today.
The ECB is tomorrow. Just so you know, it's the whole reason why the euro's all over the map right now is because of the Italian budget deficit. They reported at 2%, and then it came in a little bit. Then it was denied, but you can see the euro ran right up to the downtrend line. And you know, if you have ForexAnalytix, you know right when that happened. The chart came out, and when I push a chart, or any one of our team members push a chart, you're getting it like, you know, within you know 10 or 15 seconds of it hitting wherever we're talking about. And you can see we ran right up into resistance, and you know, noted that euro is challenging the downtrend line after the Italian budget news had come out, and it immediately was denied, well, maybe like 5 minutes after that, and fell back, you know, towards its breakout point. And I picked up a little euro at 42 just because I think it's constructive. I'm more thinking not so much about the euro at this moment. I'm thinking more about the cable. So it looks like now the no confidence vote that's going to happen between, you know, 1 and 3 p.m. Eastern time so you're talking, you know, 9 o'clock tonight UK time. You're going to get the Theresa May no confidence vote. It seems like lawmakers say right now that she has enough votes to you know, stay prime minister. However, those are all you know, people will tell you that they'll publicly do something, and then, you know, when it comes down to voting, it doesn't mean that they're going to. So today is going to be rather important as far as the cable goes, because I think the cable is going to drive the euro and the pound, so, or the euro and really ultimately the dollar index as a whole. So what I'll be looking for today is just to see if Theresa May, you know, stays in as prime minister. I think the cable can get a recovery rally. Now, you know, how far are we going to go? Well, all I care about right now is 126.60, because that was the breakdown point. So if the cable can get back above 126.60, that's going to say a lot for dollar weakness. I think that the euro will enter tomorrow, the actual ECB day, Dale.
Okay.
He'll enter the ECB day on a more positive note. But the flip side is if Theresa May is ousted, then, you know, we can see 124 in the pound. I mean, 124 is not, I don't think, is out of the question. And frankly, I had a bid. Matter of fact, I'm going to keep it in there for right now. I have a bid at 124 in the pound. I had it there overnight. Obviously, sorry, didn't come anywhere close to it, but you know, in the event that it gets down there, technically I want to be a buyer, not you know, obviously I'll be around if it happens. I actually have fairly tight stops, even if it got triggered. My stops aren't too far below the market. And like I said, I think I'll leave it out there for now, at least for now. So, but that's what I'm watching for at this moment. Now, also a couple other things that I want to point out. One of the positions that if you were a ForexAnalytix subscriber, let me grab the chat room really quick so you guys can say hi. I've been really not super active trading wise. I've and you can see there's about 100 of us in there right now, and you guys are all on Jumbotron, so say hello. And don't make wisecrack comments, people. I know they will anyway. It's impossible. They're gonna now. I just opened the floodgate. Yeah. Anyway, I have been fairly quiet with my trading. I haven't done a whole lot. You know, the euro. I tried to play the dollar weakness as the euro was, you know, coming off the 114 level on Monday. I took some losses there, and I'm like, you know, I've just been kind of quiet. I haven't been doing a whole lot. However, a position that I have taken and a fairly sizable position has been, and the reason why I'm showing you this chat room is because people in the chat room know, because I haven't broadcasted it on Twitter or any other thing, and I'm actually trading a currency that we don't typically follow even on ForexAnalytix. So I've been just posting my charts the last 2 days. I've been shorting the New Zealand Canadian, and I've got a short position around 92. Actually 92.15 I think is where my average is. I have to enter my trades every single day, so I've been basically shorting it in fairly decent size right up here at these levels, and let me share with you the reason why. First of all, I think the Kiwi squeeze is overdone, and you can see it's really underperforming today, and I think the reason why the Kiwi has been so strong as of late, we've had this really big downdraft in the Aussie New Zealand. There's a huge short position in the New Zealand dollar, which I think has been wound out probably fairly aggressively over the last month and a half. And we got above the 200-day moving average, but notice how we're stalling here in the Kiwi above the 200-day moving average. Anyway, with crude oil finding support at 50, and I know Canada's got its own issues, but with the new USMCA, the Bank of Canada may have to start raising rates soon to normalize monetary policy. And so I think the risk at this point is the Canadian dollar is not a bad long at this point, especially against some currencies like the Kiwi. And we were very overbought. We hit a big channel resistance. Okay, hit the 78% retracement. My stops, just so you guys know, previously I've already adjusted them. You'll see right here. Let me grab this fib level and draw it out a little bit. Not that one. Damn it. Okay, well that's fine. I just wanted to differentiate the two. The bigger fib here, you can see the 618 was at 93.14. So my stops, as I was shorting at the 92 level, my stops were above 93.14. As I've become more aggressive, my stops have come down because my position size has increased. And now we're breaking below channel support. Now, this is like the first 4-hour close below the channel support, but you can see this nasty divergence in relative strength on the daily chart. We were rallying the last leg higher. We pushed up. Dale might even qualify this as a 3-drive. I'm not I'm not a 3-drive expert, but you got 1, 2, third wave, the last wave, the relative strength is divergent into channel resistance, into the 78% retracement. For me, it's been a short that I've wanted to take. Now I've got orders to actually add on rallies. The thing to get to a full size position, because I'm fairly aggressive right now, but to get it even more aggressive, I wanted to sell rallies. I'm a little worried that we might not get that rally. I might, look back 2-3 weeks from now and, we might be trading back below 90 cents, down here at 88, 89. So, but this is a position that, I've wanted to take. And like I said, if you've been in the chat rooms, you've seen it, the last couple of days. And here, I'm going to put the chat room back up here. But remember, just if you guys are ForexAnalytix subscribers, it is it's a benefit to be in the chat room. I always try to explain to people like this. On Twitter, you see about 10% of what I do, maybe less than 10%. At this stage in the game, I don't even. I might tweet out 1 or 2 charts a day. If you're in the chat rooms, in our private chat room, you probably see about 70 or 80% of what I do, because everything else that I do is I'm doing it mobile, or in the evenings around family time or whatnot, or super late at night, and I just before I log off or things like that. But the majority of everything that I do is in that chat room. And to get to it, for those of you that are ForexAnalytix subscribers, you just click this little button right here and it'll take you there. Okay, enough about that. So you can see the euro is actually getting a little bit of a lift. I think the euro, if you get above this 113.60 level, that's going to open up a move back to the triangle top. Remember, the ECB is tomorrow. I don't want to get too aggressive with the euro at this point, but we've got a lot of support down here. So your risk, and that's the most important thing when you trade. Your risk. Now I'm gonna take a couple minutes and I'm gonna give you guys a teachable moment. Coach, are you here? You might have stepped out for a second. Okay. I got an email from a guy that I do fantasy football, and my league's actually pretty expensive. We do it's a bunch of it's actually, I'm part of a group of this shipping company that my buddy owns. He has all of his partners and suppliers and people involved in, and somehow I got wrapped up into this fantasy football league years ago, and we put in a pretty decent sum of money in every year, and it's like sports gambling. That's my extent of sports gambling, is just doing fantasy football. It keeps me engaged in watching the NFL games. But anyway, one of the guys that I've known for a few years from that league, I played golf with him before, and he moved to Colorado. He called me. He knows that I trade the markets, and he knows, he's known what I've done for a long time. He sent me an email yesterday. He goes, "Hey Blake, I'm trying to get over a hurdle of trading. Just with when you don't have, how do you get over the hump of getting into a trade when you have a hard time pulling the trigger?" And this guy, he works for an insurance company, and so does his wife. They both work for the same insurance company, and he kind of trades on the side. And he was talking about trading Tesla, and I got on the phone with him yesterday because he's a friend of mine, and I said, it's real simple. It's all about size. So whenever you're trading, if you're having a hard time pulling the trigger on a position, it's really about size, because if you pare back your size, it gives you that flexibility to make multiple entries, or if you're wrong, you can take the trade off and not and not hurt too bad. And it also helps build your confidence. And once your confidence is building and you feel that you're, taking those trades and not hesitating, and you're making money, then you can step up your position size. And, that was just a basic,
That's a pearl.
Yeah, I mean, it's a conversation that I have with somebody that's not a
Right.
super active trader, just somebody trying to, take a few bucks out of the market here and there around his normal job. And that's something that I think everybody can take away from. It's, if I ever find myself hesitant in taking positions, it's usually because my sizing's too big. And so whenever I pare back my size, like, I can take a position, I think about it. For example, if I'm normally scalping around the market, I don't think about it if I'm trading like $1 million euro dollar. It just, to me, it's like, I trade €1 million, it goes up 100 pips, I make 10 grand. If it, goes down a couple of 20 pips, I lose 2 grand. I don't really think about it a whole lot. If I trade €5 million and it goes up 100 pips and I make 50 grand, or if it, drops 20 pips and I lose 10 grand, that starts to, impact my way of thinking a little bit. So, if I ever find that I'm, I'm having a hard time pulling the trigger, I just pare back my position size, and hopefully that'll help you guys a little bit as you navigate through the markets. But
there's a song about it. There's also a song about use less leverage. If anyone needs to play it, it's on YouTube.
Oh, well, tell everybody what the song is. I'm going to switch it over to Steve. I'm going to let Steve take it from here. And Steve Stelios, coach, have a great one. And
you too, buddy.
And I'm sure you're going to sing the song, but I got to get going.
No, it's okay.
Yeah,
I'm not going to sing. But right, we have Mark Yusko.
All right.
Huh?
We miss your singing.
Oh, yeah.
All right.
Yeah.
All
right. Well, they're
asking for it. They're asking.
You're asking for it. So
the crowd is dancing.
Yeah. Well, I've done that live before, Blake.
I know. All right, guys. Thank you. Have a great day. All right.
You too. So this is what Blake is saying musically. Use less leverage when you trade the market. Use wider stops so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. Use less leverage hypnotically. Use less leverage.
I've missed your singing, Dale.
Anyway, that's what Blake's saying. And, I've had people say to me, Dale, I can't get that darn song out of my head. They've had to get therapy and stuff, but I hope it helped them with their trading. Anyway, you're not going to take big hits, right? So you don't try and get rich overnight. Consider it a process. I mean, Blake's talking about numbers he trades, and everyone has a different size account, but the trading part of it's all the same. The digits may change, right? So, sit back and wait for the good entries and reduce your leverage, and don't try and hit home run balls from somebody who has tried quite a few times over my trading career.
Yeah, whoever believes that they're gonna make they're gonna be rich fast. Those are the people that blow up their accounts 99% of the times.
Yeah, I mean,
right?
in baseball, Steve, the biggest home run hitters are also normally or many times the biggest strikeout king. So they always get another at bat. But if we do it, we're on the bench.
Yeah,
we're not playing anymore.
Exactly. By the way, I just wanted to add something about Blake's trade. You don't need to be an Elliott wave expert to also see here that we have a 5-wave completed up. And why do we have a decent confidence that this is a complete 5-wave? Simple because wave 1 literally is equal to wave 5, which is, when you have an extended 3, that's the rule. When the third wave is extended, which is the most usual one, you want to see equality between wave 1 and wave 5. I mean, you want to see it's the most common thing, and that's what we have here. So that's
Blake had a couple of moving averages converging. I forget where on one of the charts he was showing, and
probably it was the 4-hour chart.
Yeah, probably maybe it was the 89 and a half or so it came in.
Yeah, but as you see, multiple resistances here, also 5-wave higher. So I'm not really sure what's going to happen from here. Meaning,
data coming up, guys, in 2 seconds.
At the very least, we should see, a 3-wave down. So I like this trade, but we should probably keep our expectations. I mean, 90.
Sorry to
Let me
interrupt.
see,
CPI
Stelios.
is a bit
No,
just
no,
a tiny.
no, you did well.
So 0% month on month, 0.1 expected, and 2.2 on the year on year as expected. So
Real
really,
average hourly earnings increased by 0.3%. CPI year on year, though, is as expected, 2.2. The monthly is a little bit lower, but the yearly, in essence, isn't affected. So more or less, nothing to really pay attention to. So it's a non-event. So I do like the Kiwi. I do like the Kiwi cut position lower from here.
Nice call on USD Max too.
Yeah, I told you the other day, it looks, from the pairs that we were, looking at, it was looking the more promising, and I do think that we're at least going to retest the 20 area, and we see what happens from there. Because, if we see a breakdown below 20, we might even see an acceleration. In general, this whole price action to the upside, you don't need to be, you don't need to be a nuclear scientist to realize that it doesn't have impulsive characteristics. It's slow, it's choppy, it's very, very overlapping. It's had some legs that could fool somebody like this one, that something big is brewing. But if you look at the whole structure, it's corrected.
Overlapping mania.
Yeah, something you can call it. So I wouldn't be surprised if we saw one more leg lower, because this move lower, on the other hand, looked quite impulsive. Itself, if you zoom out, in my opinion, this is the first leg of a larger correction. This is probably the second leg of that larger correction, but I do think that something is missing here, and it might be starting even from here. Why not? So I do think that USD MXN is one of the most promising from the, let's call them exotics, although it's less exotic than others, but it's more or less an exotic. I mean, MXN is not like doesn't have a big share in the FX trading, but it's decently popular among the exotics. So other than that, what we saw yesterday was definitely not bullish price action. The market is certainly confused here. Why? Because we get one after the other, we get like a big hammer. The day that follows, we get a very strong open, and then we end up with a shooting star. So we have two consecutive pin bars with very long wicks. That shows that the market is definitely undecided of what is to happen from here. A lot of people have mentioned that we've had a death cross. That's how this is called, when you see the 50 daily moving average crossing below the 200 daily moving average. So that's usually considered like a bad omen for trend. Usually you want to see, in a big trend, you want to see the 50 being above the 200. And if we zoom out in the S&P, actually, let's do that. If we zoom out in the S&P, you can see the 50 is in green. The 200 is in blue. And as you see, since we had that big correction in 2015 until the beginning of 2016, from that point, from the beginning of 2016, actually April, that the 50 crossed over the 200 once again, we've spent 2.5 years that the 50 DMA was actually either converging or diverging, but always staying above the 200 daily moving average. Okay, so let's see if we're going to get something bigger from here. Personally, I am looking to sell. I have a pending order. Yesterday didn't get triggered. I have a pending order to sell some S&P at 26.90, and I would want to keep being a seller all the way up to 28.15, because when we were doing this corrective leg higher, I believed and I wished at the same time that we would have seen like a bigger extension here to, in essence, get a lot of people trapped, in the wrong direction of the market. But after having been rejected once again here, I do believe that this rebound, however it unfolds, is not even going to make it here. So I want to start building a position from here, and I want to keep building a position all the way to this point, because I don't believe that this time we're going to make it above this area. I think that we are actually going to get rejected before we make it there. And I want to have a position because I'm quite convinced that this move lower is not over yet. Okay, so I'm not really going to be discouraged even if I see 2, 3, 4 days of like strength. I will actually be viewing this as a nice opportunity to accumulate a short position. Now, having to do with the euro. Very briefly, I don't believe that anything is going to happen until tomorrow for obvious reasons. I mean, most probably it has stayed in a range and within a symmetrical triangle, and I do believe that the catalyst for this to break is going to be the ECB tomorrow. If I look at every single pair, and especially if I have a look at the DXY, personally, I would want to see some kind of a knee-jerk reaction with the dollar moving higher and the euro perhaps breaking lower tomorrow. That would be nice if it happened, during or due to the ECB, following after the ECB. I would want to see one more spike higher in the dollar. So I would be more inclined to look into doing something with the dollar if I saw some kind of a spike higher and then the market pulling back from there. That's where I would be looking to position myself until that happens. I really don't see why I should be doing something with it. I mean, I had a short position in the USD Swiss, which I did close, and I think it was the right decision because we got like a pin bar yesterday, the day before yesterday, and that already showed me that just by testing the upper level of this support, probably that was enough for the market. And yesterday, I bet a lot of people got trapped short at the very wrong place because we did probe the area just below that low, and then we ended up with quite a bullish candle. I mean, that was an outside white candle, so I don't know if the move lower is over for the USD Swiss, but definitely I feel quite good for taking profits near the lows, because since the beginning I mentioned here that this might as well be just a corrective move to the downside. Now, having to do with cable, Stelio, what time is it, the confidence vote? What time is it today?
Good question. I think it's 3 p.m. Eastern time, so it's going to be late European time.
Okay.
I can check again, but it's going to be quite late European time. The results,
okay.
I mean.
Curiously, we do see a rebound today.
So our friend Stephen says it's between 6 and 7 UK time, I'm assuming, but there's going to be some time after that for the results, I think. But yeah.
Okay.
So
curiously, we are seeing a rebound ahead of the no confidence vote. Stelio, what do you think will happen if she loses the vote? What is the most likely outcome in that case?
Well, the direction is that if she loses, then the Conservatives have to put up at least 2 candidates to succeed her. Is that good or bad?
Do we know who is willing? Do we know who is willing to participate in that?
Actually, I think Rees-Mogg is definitely one of them because he's the one who's challenging her. But then after that, it's I don't think there have been any firm. Actually, hold on. 9 p.m. are the results. So 9 p.m.
Do you think there is actually any chance that if she loses the confidence vote, that's going to be interpreted by the market as pound positive for any reason? Because so far we're seeing a rebound today. I mean, somebody would guess. And by the way, let me mention that we're seeing this rebound exactly from the 127% extension of this move higher. So this was an interesting fib extension. But I would caution, because I have no idea what's going to happen with the vote. But 127, the breakdown level, should act as resistance. from this point on. So, Stelio, what do you think?
I think the rebound that we're seeing is clearly on the back of the fact that it looks like May is going to win.
So
that's I think why the pound is surging now, but surging is rallying a little bit because
so the
we've
chances
been talking
that she's going to hold the majority. I mean,
I mean, betting houses have her like 7-1 on to win. So it seems to be she's got already 158 public, like Blake said, public people have said in public that they're going to support her. Obviously it's an anonymous vote, so you can say one thing and do another, but chances are she's going to be she's going to stay on, and that will strengthen her position, that's for sure, because remember they cannot do this again for 12 months. They cannot
but even if they could, why would they? I mean, if you lose a confidence vote, why would you do it a month afterwards? I mean,
you're right. But if she loses, what happens next? Well, it will depend on who takes over, because if it's somebody like Michael Gove, then he's more in line with what May has been doing and a bit more EU friendly. If it's Rees-Mogg, he's a bit more let's get out at any cost. So if
even a hard Brexit within his agenda. Okay, good.
Yeah, so it's difficult to predict. I mean, at this point, who the hell knows?
What if it's Elton John? Is he more pro EU or Brexit?
He's a rocket man.
So it doesn't matter. He could leave the planet. All right. Cool, man. So we're looking at. We just have to stay on our toes. Steve, go ahead.
I was just going to say, I think the thing that could change things is the EU, because the EU have said repeatedly, this is the only deal and the best deal, end of story. So May can go back and forth to Brussels 100 times. This is what the EU people are saying. If they stick with that, then it's either this deal, which I don't think it has any chance of passing, unless something major happens, or no deal. So I think it's all up to the EU, and they're bluffing really well so far. Let's see how they're going to continue, because it's not a simple thing letting go of the UK, from the EU. It's a big thing. So the Europeans might be all nonchalant and we don't care. This is a deal, take it or leave it. But really, they know it's going to hurt. So it depends on them. This is I think.
I'm actually buying the European bluff. I mean, I believe they've considered the alternatives, and I think they believe that it's much more beneficial showing a hard stance, because imagine if they make it easy for the UK to leave. I mean, that obviously makes the door out of the European Union and potentially the Eurozone a revolving door, right, Stelios? So I think
that's a precedent.
Exactly. So I think by balancing risk and reward, I think that the EU would rather play hard and even end up losing more in terms of short-term GDP growth or trade or whatever else, than actually make it seem like an easy and seamless process for somebody to leave the union. Because as Coach said, that would set a very bad precedent. So I believe that they're not bluffing. I believe they've made the decision that they shouldn't make it easy. You know what I mean?
Yeah, I agree. But on the other hand, the UK is the UK. You can't say, if it will create a precedent for Greece or Portugal or whatever. These are countries that are much smaller in size. So I understand what you mean, and that's what I would do as well if I was the EU.
What makes you think that the average, let's say, Italian citizen is not going to be prone of believing the average Italian populist politician that will try to tell them that the UK did it, it wasn't tough, we can do it as well, and the average person doesn't really understand economics, so they can easily get persuaded that sure, I mean they're the UK, we are Italy, sure, why not? I mean, one and the same.
Yeah. You're right, and you saw Salvini today. He's already comparing Italy to France. He's saying, why is France taking the budget deficit to 3% and we're not allowed to? It's already happening. But yeah, you're right. It's well, let's see how their bluff goes. Let's see.
So bottom line, I don't believe it's a bluff. I believe they're gonna they're gonna insist in making it tough, and they're not gonna be doing too much of a backing off from
Steve only knows this because he's one of the toughest negotiators in Greece. In fact, he's like the Donald Trump, the art of the deal in Greece.
Him and Yanis Varoufakis, right?
Oh my God, no! I get dizzy just by hearing the name of Varoufakis.
Yeah. Give me a raise. No. All right, man. So, Steve, what are you thinking here with the yen and the Dixie? I'm also pretty surprised it didn't take care of pushing to new highs.
Listen, the Nikkei is still holding within this consolidation, but it does look corrective to me. I mean, it looks to me like the Nikkei, needs one more leg lower. At least that's how it looks. So, as long as the Nikkei points lower, I would still have to believe that if the yen is to do something, it's going to do something to the downside. But as I've said many, many times, why invest capital and put margin on something that really is, intolerably annoying to watch, and it doesn't want to do anything. I mean, we're getting some knee-jerk reactions from the USD yen. I mean, for example, 2 days ago we had like that big up day, but 2 days before that we had like a big down day. 2 days before that we had another big down day. But bottom line, nothing is happening here, right? I mean, this market is clearly coiling. So from one hand, just by seeing this as a triangle, my gut feeling tells me, this would be more likely to break to the upside for one more push.
Yeah, that's what I'm thinking. And is that at 116? Okay, so that's what I'm looking at, your 1.618 target, because that would be a beautiful 3 driver on the weekly.
But on the other hand, the Nikkei shows something different. But of course, to be honest, recently the USD yen has been so much decoupled from literally everything that I wouldn't even be surprised anymore if we actually got the USD yen rallying higher, while Nikkei is still not breaking above this consolidation. So who knows? I mean, the Nikkei might rally somewhat, and the USD yen might actually break to new highs, because as I said, I mean, we've seen days that the USD yen is not responding to anything. It's not responding to risk. It's not responding to yields. It's not responding to anything. So it seems like a completely pegged market at the moment. I mean,
I looked at it as it held up great during a week of risk off. I mean, because I was touting the short side, and it came grudgingly, and also thinking didn't do much with that huge bond rally either.
Exactly. Absolutely nothing.
So okay.
Who knows? But in all honesty, the price action that we've recently had in USD yen is definitely not free market movement, right? I mean, I don't know, probably the BOJ, I have no idea, but something is holding it there while it shouldn't be there. I mean,
they're collaring it.
Yeah, exactly. They're coloring it. I mean, exactly. It's like it's almost pegged to the dollar for a period of time, right?
Yeah.
It's completely unresponsive. So I really can't find any argument.
Today's a perfect example, right? Risk on, S&P's up 37.5, yen,
and it's not doing anything. Yeah, and it's not doing anything. Yeah, exactly. So I really have no idea. I couldn't give a single argument to somebody why they should invest capital in trying to do something with it. I mean, I'm watching it every day, but I'm literally ignoring it. I mean, I'm not even considering taking a position there. I mean, let it do whatever it wants to do. We have so many markets, so we can get involved with another market, right?
Exactly.
Now, the only good thing about having in essence, a collard, as you mentioned, USD yen, is that if you have an outlook, if recently you have an outlook with a specific currency, in essence, the fact that USD yen is collared gives you the ability to trade a currency almost on its own. So, for example, I mean, if you look at like euro yen, since USD yen is doing nothing, if the euro moves and the USD yen keeps doing nothing, the euro yen is going to move only in the direction of the euro. Same thing with the cable. So the cable, for example, has been following what the pound has been doing, irrespective of what the USD has been doing, simply because the USD yen has been doing nothing. So, as long as it stays like that, it gives you the ability to trade a single currency against something that's not even moving. So if you have a very clear, perspective about a currency and you don't want to take the risk that something might go wrong with your view on the dollar, the yen is a good idea to trade it against, as long as it doesn't break above or below this coiling formation, because once it does that, usually what follows a period of contracting volatility is that usually when you get a breakout, you might see volatility coming with a vengeance. So you might actually see some kind of an explosive move, but we first need to see it move, and we can then discuss that probability. The pound yen, by the way, still looks like a decent short, and we're currently about to test the first area of resistance, and if that breaks, then we have this trend line support that can act as a resistance through the pound yen. Doesn't look like a bad trade, to scale in. If you're still looking for more pound weakness. Now, let me open the question box, by the way. We have Mark today, right? Unfortunately, I won't be able to be here because I have to go to the orthopedist, but
Okay.
pound has rebounded from the 78.6.
I tell you what, like everyone else, you can listen to the recording. It's on our webinar page at Forex.
And I actually have access to the recording before anybody else.
I thought probably while you're rendering it, you could watch it.
Yeah, absolutely. So
I'd like to tip my hat to Valu, who's one of the hardest working guys I know, that spends a lot of time putting our content together, and how tough he is even when he's not feeling good. He really is was a great find for the company.
Indeed. So USD CAD, let me mention here that USD CAD is in essence stalling at confluence of resistances. So you see it's this ascending channel, it's the 78.6, it's also this previous high. So I do understand why somebody would want to position themselves short, but I want to be honest here, I would rather see a break below this channel to do something more. But if you're looking for a good risk-reward ratio, I think that you currently do have that. When you're wrong. I mean, above this previous high, I think then we're headed to 135.50 to 136. USD NOK, also one of the pairs that seems quite resilient. We rebounded strongly after retesting this trend line, but on the other hand, we are losing momentum and we still can't clear this 860 zone. So range bound for the time being. Now, if we see a breakdown below this broken resistance, then we can start talking about a false break higher. But until that happens, I would be very hesitant, because even if you look at USD SEK, USD SEK looks more like a consolidation now. I mean, this looked like a very nice ascending wedge, but the fact that we haven't accelerated lower makes me think that this thing is not done moving higher. So I would be looking for one more thrust to the upside as a more probable scenario than anything else. Of course, there is always the possibility that this is some kind of a distribution, this is some kind of a rounded top, I mean, this can be the case, but statistically speaking, the chances that this is a triangle, so this would point to another push higher in the dollar first before anything else. So, you know, quite a lot of pairs tell me that the dollar really would want to push once again. The DXY might push towards 99 before we finally see some weakness. I also see a lot of people trying to fight this dollar strength. So, you know, usually that works, you know, oppositely. I mean, you know, like gasoline to the fire. So I think that, you know, we probably need to see one more move, and tomorrow the ECB can definitely be the catalyst, because if the ECB comes out more dovish than the market expects, I remind you that 58% of the 58% of the index is the euro. Another 4.3% is the SEK, which is very, very closely correlated to the euro. Another 3-point-something% is the Swiss franc, which is also very closely correlated to the euro, meaning that if the ECB comes out dovish tomorrow, and knowing that the S&P, you know, tries to, in essence, you know, follow, have the Swiss franc following the euro, and more or less the same applies with the SEK, I would expect that should be enough to move the DXY on its own quite significantly. Now let's have a fast look at the metals. Gold might have a little bit more strength left here. And yes, gold can keep rallying even with dollar strengthening. I mean, obviously it's not helping it, but on the other hand, you know, it can happen. It would just rally more if the dollar was not strengthening, but that doesn't mean that the two of them cannot rally together for a period of time. Silver is retesting again once again today this descending trend line resistance. So this is the first trend line that matters. The second one, and most important, is this horizontal one, because you can view this as a rectangle bottom. You can even look at it as a triple bottom if we break above 1480, if we have a daily close above 1480, 1485, and that would then point to a rally towards 1580, perhaps even a little bit higher towards the 61.8 of the last move lower, which is just below $16. But until that happens, or unless that happens, to be more exact, you know, I have to maintain a bearish bias for both gold and silver, simply because silver hasn't even managed to get unstuck from a range, and gold, even though it has managed to crawl higher, I mean, this so far looks like a textbook corrective channel. So I'm not really impressed by the manner in which it's rallying, because if you zoom out, you can easily see here that we've already registered quite a bearish development by breaking below this big consolidation, and even by rallying back to 1560 to 1260, sorry, that doesn't invalidate this view. So I would still be looking to fade gold strength, despite being bullish both those metals in the long term. But you know, the fact that I have a fundamentally bullish bias doesn't mean that, you know, I have to force the market to show me something that's not happening yet, right? So I don't think that the market is about to do that yet. I think that the market probably would first want to, you know, knock out people that are looking this as the beginning of a bigger rally, perhaps thinking that, you know, in combination with the risk off we have, and you know, the jitters about the global economy, that perhaps this can be the beginning of another rally in gold. But personally, I think that it's more likely that we will first see another push lower before seeing a resumption of the long-term bullish trend. Because don't forget that gold is in, I mean, if you look at the primary trend, at a multi-year trend, gold is bullish. I mean, even the drop from 1900 to here, if I zoom out, you can clearly see that this is a correction, right? Let me remind you that just before the Great Recession of 2007-2008, gold was trading at 660, right? So then it had a massive rally towards almost 2000, and it's very naturally after such a huge leg higher to see a prolonged corrective move lower. But if you look at the big picture, this move lower, even if we make it below 1000, it would still look corrective to me. So I maintain a long-term bullish bias both for gold and for silver. I do believe that in the longer term, silver is also going to overperform gold for a period of time because it has been underperforming for a long period of time, but we're not there yet. So, you know, we have to acknowledge that. And a fast look before we start at copper. Copper still stack, and be careful because this is quite important. I'm really looking. I'm really paying close attention to what happens with copper here. Copper looks more like, you know, it had one leg lower, and if I had to bet, I would say that the break lower is a more likely scenario than a break higher from this triangle, and I might actually trade that. You can even see from the RSI the fact that we're actually oscillating around 50 shows us that we have a clear contraction of volatility. And I do believe that the next leg, whenever we break either above this trend line resistance or below the trend line support, should produce some nice follow through. So I do think that this is one potential trade for somebody to have, in your radar. I do think that it can produce some nice profits whenever it breaks out. Personally, I would be inclined to trade it if it breaks to the downside. Probably I'm not going to follow it if it breaks to the upside. So I have one potential trade here. I'm probably going to place a stop order to get triggered if it breaks lower. And, you know, that's it. So we have Mark with us, Coach.
Yeah, and I just want to add that Steve Bolge's saying that Dr. Copper could break down and need a nurse in the upcoming weeks. So, a great review again. And Steve, thank you very much. And Stella and Blake, and Mark is with us, Mark Yusko. Mark, welcome back to FACE. I'm going to make you the presenter. Appreciate you returning and looking forward to talking to you. Just use the drop-down menu.
He's self-muted. You need to unmute yourself, Mark.
Yes.
From the panel on the right side of your screen, there is.
Just did it.
How about
Okay.
that?
Oh,
Hi,
yeah,
Mark.
perfect.
Yeah,
Hey guys.
Good. How are you, Mark?
Good. How you doing?
I'm doing okay. You're going to share a screen and talk, or you just want me to move around to different markets that we cover? Up to you.
Why don't you lead, since I am just tech challenged?
Okay, I can relate to that.
Coach,
People, yes.
Coach, since I have to go, can I ask a question, to Mark?
Absolutely.
Before I go? Okay, perfect. Mark,
Okay.
Mark, although I'm following you on Twitter, we've spoken again here on the webinar. We share 95% of our views about the global economy are the same. I mean, we from what I've seen, we have the same idea about the situation in which the U.S. and the global economy in general are. Yeah. The only thing that we seem to have a big divergence is that I see that you are a very big believer of cryptocurrencies, while personally I'm totally unconvinced because I don't really see why cryptos can offer superior value to the traditional fiat currencies, which at least have some, whatever that's worth, of course, government guarantee and their legal tender, or to metals, which we all know that for example, especially gold and silver have been accepted as money for 5,000-6,000 years, and I don't think that's about to change anytime soon. So I would really want to hear your viewpoint about that.
Yeah, so we do have a lot of similar views, and I don't want to. This is not a criticism of you, but I want to challenge the one point you made, that fiat currencies have value. Fiat currencies have no value. They have zero value. A green piece of paper with a 20 written on it has no more value than one with a 50 written on it or one that has 100 written on it. You can't turn it into the government for anything. And no, it's not even a promise. There's no promise. You can't turn your green money in to the government and get anything. It used to
after
be.
1970 and after 1971, you're absolutely right. But the question is the following: both of them, I mean, cryptocurrencies and fiat currencies, are based in essence on faith, because that's what you implied. That the only
trust.
thing that exactly trust and faith, exactly faith in a system, trust in a government, etc. So why would it faith in a government or trust in a system, and that comes from a person that really believes that the governments have abused in the absolute extreme, the way that the economies work. I mean,
so let me ask you this. Do you know anybody from Zimbabwe?
I know what happened to the Zimbabwe currency.
Okay, do you know anybody in Venezuela?
Yeah, good one, Mark.
I know absolutely.
No, but I'm asking, right. I'm asking, do you know anyone from Zimbabwe or Venezuela?
Yeah, I do, from Venezuela.
Okay, so I know people from both countries. I have in my office that this friend gave me a 100 trillion Zimbabwe dollar bill that would not buy a loaf of bread. Okay, 100 trillion Zimbabwe dollars wouldn't buy a loaf of bread. So what's happening all around the world is the dictator playbook. And the way it works is a dictator comes in and takes control of the assets, and then you devalue the currency and inflate the price of the asset. What people don't realize is the Venezuelan stock market last year was the best performing stock market in the world.
In nominal terms. In nominal terms.
That's my whole point. It was the number one. And if you owned Venezuelan stocks or you owned Venezuelan property, if you were part of the dictator's cabal, you got very, very rich, and the people got very, very poor. So what are the people doing in Venezuela? It went from $2,000 a month of Bitcoin exchange in Venezuela a year ago to over $3 million a month. And they are, if you look around the world at the countries where Bitcoin is being used most heavily, it's in countries where there are dictators who are stealing the wealth. So it's Turkey, it's Venezuela, Argentina. I won't call him a dictator because I actually like mockery. But if you look around what's happening in terms of currency, the reason that Bitcoin will be a superior currency over the long term is it's sound money. It can't be inflated away by a central government. And it's early days, right? You talk about 5,000 years for gold. Absolutely, 5,000 years. But gold was very, 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 very volatile in many periods in that 5,000 years. And there were times, I mean, imagine being the first guy who someone came up to you and said, hey, I'll give you this shiny yellow rock and you give me some of your food. The guy's like, get out of here. I don't want a shiny yellow rock. But
then you hit the guy over the head with the shiny rock and take the food.
And take the food. That's exactly right. So here's the thing. 5 years ago, I stumbled across blockchain technology and Bitcoin, which is the first application of blockchain technology. And I was skeptical. And the more work I did, the more people I talked to, the more I looked into it, the more excited I became. And there's no question in my mind that over a period of time, and I'm talking decades, not days, there will be a significant shift away, not completely away. So I'm not saying that Bitcoin is going to be the only global reserve currency, but I'm going to say that it's going to become popular enough that it does the two things that currencies do. It acts as a store of value and as a medium of exchange. And everyone says, oh, but in the last 12 months, it's down 80%. Right. But in the last 10 years, it's up many, many thousands of percent. And if you held any other currency in the world over the last 10 years, you have less value than if you held Bitcoin. Now, I'm not saying everybody should rush out and sell all their other currencies and buy Bitcoin, but I'm saying as a portion of your portfolio, and I think a growing portion over time, I think it's got a place. So it's a long story, and we don't have time to do it this morning, but we could talk about this, once a month for the next 10 years.
We will.
I think we get the whole story.
Thank you, Mark. Steve,
Can I ask you something, Mark, out of curiosity? Because you're right, it's a big conversation, and we'd gladly actually have even a webinar exchanging views or having a debate about cryptocurrencies, why they can or why they can't potentially end up replacing. And wait, let me be specific about that. I do believe that blockchain technology has a lot of value. So I do believe that the future might actually be currencies based on the blockchain technology. I'm extremely skeptical if those currencies are going to be the ones we currently know. Like if they're going to be Bitcoin, if they're going to be Ethereum, because you know how governments are, right? If they see that this thing actually becomes popular, they're going to make what they can to, put their own.
Have their own because they're.
Okay. This is really important.
Okay.
A government cannot have a cryptocurrency. Government cannot have a cryptocurrency. A government can have a digital currency. In fact, the U.S. dollar is effectively digital today. 92% of U.S. dollars are electronic. Only 8%
Why can't
are
they,
notes.
Mark?
They can't because a cryptocurrency must be decentralized. There cannot be one owner. It must be ownerless. No one owns the Bitcoin network. There are thousands and thousands of nodes around the world that operate. There are miners that secure the network. It's the most secure network in the history of networks. It's the most powerful computing platform in the history of computing platforms. And it's all because it's decentralized. The reason centralized systems fail, the reason the first 3 attempts at digital currencies back in the late 80s and early 90s failed.
Because all governments are corrupt.
Well, it's not even that. That's true, but it's not even that. A digital currency has a problem, 2 problems actually. One is it has a single point of failure. So any centralized system, think about a centralized company. How do you stop a centralized company, right? One CEO, one home office. Well, you kidnap the CEO or blow up the home office. And I'm not encouraging terrorist activity. I'm just saying, if you wanted to shut down, think about Napster. Napster came out and said, all right, we're going to allow people to share files of songs. The music industry didn't like it. They went to the government. The government said, all right, Sean Parker, you're arrested and we're going to break your server. Game over. Centralized system. The second problem that digital currencies have is they don't solve the double spend problem. So if we decide we have a new digital currency and I have digital currency in my account and I want to send you one, Dale, okay, I make a copy of mine, I send it to you. Then I make another copy and I send it to Steve. I've just committed fraud. Now, no one can stop that in a digital system, but in Bitcoin, okay, using blockchain technology, which has a third layer to the ledger, it's not just debits and credits, but a third layer. It's a public. So if I say I'm going to transfer 1 Bitcoin to Dale, everyone on this call has to give thumbs up. They have to see that Bitcoin transfer from my ledger to your ledger on the chain, and then it becomes an immutable transaction, and we solve the double spend problem. So every government in the world, India's already done it, is going to try to move away from cash. Japan's going to do it. Russia's going to do it. China's going to do it. They're all going to have digital currencies, but they will not be cryptocurrencies because they are centralized, they are fiat, and they're still subject to devaluation at the hands of corrupt governments.
But,
but I don't feel strongly about that.
Isn't it a form of, I mean, theoretically speaking, like you can't have infinite amount of Bitcoins, but as the recent past has proved, nobody can stop infinite number of companies or people creating infinite number of cryptocurrencies, right?
No. Okay, this is really important.
We currently have
don't conflate the term cryptocurrency. don't conflate the term cryptocurrency. There are only 12 cryptocurrencies.
With tokens.
All the other coins or tokens are utility tokens.
I used the token mark in Chicago to get on the bus. Yeah.
Very important point. A utility token is it gives you access to a network or allows you to have a use case. It's like a Chuck E. Cheese arcade token. A cryptocurrency is functioning as an exchange of value, a medium of exchange, or as a store of value. And there are only a dozen of those. It's Bitcoin, Monero, Dash, etc. The others are basically pre-seed and seed stage venture capital projects. 90% of them will fail. They have nothing to do with the supply of quote unquote cryptocurrency. Cryptocurrency, as you said at the very first point, right? The only reason a currency functions is because of trust. And they all go along this thing called the law of increasing returns. Paul Romer just won the Nobel Prize for this. And he basically wrote 30 years ago that when you have something, it doesn't have to be the best technology. It just has to gather the most network effect. Betamax versus VHS. There are myriad examples of this throughout history. Once you get to a critical mass of acceptance, then you can become widely used. So Bitcoin is a sound currency. It is a cryptocurrency. It's decentralized. There's 21 million. That's all there will ever be. And that single currency can never be deflated by other people creating utility tokens. Not related at all.
Question. Last question, because I really have to go. I have an appointment with the orthopedist.
Yeah.
What is the price under which you?
Oh, you took every question away from me today.
Yeah. What is the price under which you would lose faith? Because theory says that anything that loses more than 80% from its peak is likely a bubble that has burst, and it has a very high likelihood, it's not impossible, but a very high likelihood that it's never going to recover again.
Simply not true at all. Again, that's just simply not true at all. There have been 5 quote unquote bubbles in Bitcoin, all down 80%, and it's recovered here's the thing. This is not a bubble.
I think it would be unfair. It would be unfair to count the ones that happened when very few people were actually into that market, because we have to agree on that. This is the first bubble we had in Bitcoin, with cryptocurrencies having become popular and people participating, globally, right? I mean, initially,
every measure of fundamental value of the Bitcoin network is better today than it was 4 years ago when we had the exact same situation. We went from $10 to $1,000, from $1,000 down to $166. Everybody said it was dead. Everybody said it was over. Today we're at $3,400, which is materially higher than $166 and materially higher than $1,000, the previous peak. So
under which
people
price
are
would you
focused on the wrong number. You can't focus on what the price was on one day last year. That's not the value of the network. The value of the network goes according to Metcalfe's law, which has to do with the number of participants. The number of participants in the network is higher today than it was last year and the year before and the year before. The number of daily transactions, higher this year than it was last year and the year before and the year before. The number of global nodes, higher today. The number of global users, the number of global wallets. Every single fundamental factor of Bitcoin is better today than it was last month, the month before, the year before. Now, you can say, oh, but there's this big pop in transactions last December. Yes, there was, because the price deviated from value. It's like saying that NVIDIA is going to go away because it went down 49% in the last 30 days. It's just not going to happen.
Which, by the way, was a factor of what happened to cryptocurrencies.
Debate.
No, it's an interesting debate. Anyhow, I have to go. Thank you very much. I'm going to listen.
All right, good to see you. Take care.
All right, Mark. I'd like to follow up on some of the things that you really are a great ambassador for this new asset class. I want to say that because Steve's very good, and he hit you with a lot of stuff that you actually made him quiet after some of your answers.
No. That's not the point, Dale. Here's the thing.
I know.
I've never met any smart person, right, who didn't start skeptical, including myself. I started out very skeptical 5 years ago. And here's the thing. If you spend time truly learning about the technology, about blockchain technology, and the applications of blockchain technology, of which cryptocurrency is only one application, and Bitcoin is only one application of cryptocurrency. Once you spend the time and you meet some of the people that are involved, and you realize that the flood of talent into this space is like nothing I've ever seen except one other time in my life during the early 90s and the internet.
Okay, .coms, yeah.
And what people forget is, Amazon, great example. Amazon is a network. It's not really a hierarchical company the way most of us think about it. There is a company that owns the network, but the reason Amazon works is it's a network of users that facilitate everyone else's use by creating
the acceptance. Like you said, it's going to happen. Data. Right. Okay. So, Mark, I know you're a pretty good technician too. And I also know that you probably talk to a lot of other very good strategists and technicians. And, because my background is looking at formations and so forth, that I actually am becoming interested. I have a 3 drive formation that may be setting up under 3,000. They maybe take out the big round number, one more flush, but as you can see, a lot of the RSIs are not confirming. We've been diverging for quite some time on the 4-hour, and for the first time in a while, the RSI on the daily these were all confirmed lows. So you can't count on when momentum is confirming price that's the low. But now, even if we broke under to 3,000, we will have a divergence on multiple time frames. Are you hearing any numbers that people like that are considering entries? Any levels that may make you interested to add on to your holdings?
Yep. So let's talk about this, because look, I was wrong, flat out wrong. I thought the lows were in February at 5,900. We touched that level 4 more times, and then we had this giant drop here in the middle of November from around 5,900 down to where we are today at 3,400. And so, Aaron, so what I miss? Well, what I believe I missed in doing a lot of work on this is this problem of the futures markets, and very similar to what happens in the gold markets, if you're believe in that, which I do. That
hypothecation of people.
Rehypothecation, exactly. And so I think the problem is I believed that cash settled futures wouldn't allow the rehypothecation problem to be as acute. And it turns out I think I was wrong when you look at the data. And I think what's happening, honestly, is that there's some very large and important institutions that really don't love the idea of Bitcoin being successful, and they can buy physical Bitcoin and then they can short with a vengeance multiple times that holding in the futures market and essentially rehypothecate on the way down. So I think that's creating a lot of downward pressure. And the problem you have with this asset is it moves along this parabolic growth curve following Metcalfe's law. But the way it does that is it moves in these parabolic advances and then crashes. So, and that's because what happens is the early adopters or the innovators or the believers, whatever label you want to use, the 2.5% that kind of got this market going, they're not going anywhere, right? There's thousands and thousands of wallets that have never done a transaction in last 5 years. So those people aren't going anywhere. Then you have the converts, people like myself who came a little bit later to the party. That's another 10, 12% of the general population. And those people have pretty high conviction, and they're not going anywhere either. the problem is then you get this group of speculators, and speculators always are drawn to rapid price movements. So when this thing was running from 10 to 100, you had speculation, and then it crashed. And then it was going from 100 to 1,000, and there was speculation, and it crashed.
And not only speculation, a lot of people using it as a trading vehicle, owning it on margin, leverage.
Yeah, and that's what I mean by speculation. And again, I don't use the term speculation with a negative connotation. Right? It's just you have a different time horizon. There are a lot of speculators in history that are really, really talented, and they're just traders. But an investor has a different time horizon. They want to buy something, hold it for a long time, make a big return. A trader or a speculator, and the difference here is an investor buys or sells based on their perception of the price relative to value. A speculator is really only buying because the price is moving, or selling, right? They could be shorting on the way down, they could be buying on the way up. And again, that's not inherently evil, but what it does, it exacerbates moves. So the move last year from 10,000 to 20,000 that happened in basically 35 days, I tweeted about it, I wrote about it, saying, guys, this is crazy. There's going to be a correction, and you should kind of step to the sidelines, wait till it bottoms somewhere under 10,000, kind of first, second quarter next year. And then I kind of revised saying, well, I really do think 6,000 is kind of where that flush happens, where all the people that bought in late got kicked out. And it seemed to be that, right? We were stuck at 6,500 for a very long time.
Yeah.
And then we had
many retests. What I've learned is the more retests the market has of a support or resistance level, become more skeptical and jaded, because the markets usually don't accommodate people and say, well, you missed buying it at support in March. Here, it's May. I'll give you another chance because I'm a nice guy. So when they accommodate, normally if a level's important, you get the move off of it, maybe one retest, but it was like months of giving people, hey, come on in, the water's fine, this is going to hold. So well, I'd like to ask you something for old timers that really don't even know how to purchase Bitcoin. What do you think of GBTC as the Bitcoin trust? Is it viable? Is it? Do you think it is a viable way to speculate on the price of Bitcoin?
Absolutely viable. Here's the thing. What GBTC is it's the only listed way that you can hold in a regular brokerage account of getting access to Bitcoin. There's no ETF, and you don't have to own it in your wallet because they do the custody for you. And what Barry Silbert and Digital Capital Group in creating this entity that created these trusts, and they've got one for Bitcoin, they got one for Ethereum. I think they've got 9 of them in total.
Okay. What is GBTC the most liquid? Because
by far.
Okay. Yeah. Because I look at the 1 hour chart, and sometimes you just get dots. That tells me there's not a lot of volume.
This has got $800 million of investment, and Grayscale is a really good organization, and so this is absolutely a viable alternative for trading. The problem you have is historically this traded at a huge premium, like a closed-end fund, because it's essentially like a closed-end fund. Okay. And it traded it at 180%. So basically, if Bitcoin was 10,000, you were paying 18,000 for $10,000 for the Bitcoin. That was a bad idea. And so when it started going down, that premium unwound. And I think today, I don't think it trades at a premium.
Okay, that'd be good to know.
So I think at this level, what you need to decide to buy it here is all the things you were talking about from a technical perspective. I believe the fundamental story is intact, but I think right now there's more speculative activity than fundamental investors, because all the fundamental guys, they're in at much lower prices. They're not doing anything. And what we have now is the final washout of the speculators that came in at 6,000 or 5,000 or 4,000 last year. Mm-hmm. And they went up to 20, and at 6 they were still a little bit in the money. Well, now at 4, or 3.4, they're not in the money. So they're actually still selling. So what I would look for is what you said, is when you get a divergence on that relative strength, when it looks like people are starting to accumulate again, maybe you could buy. And, you know, I wouldn't call this, right, a double bottom yet, because you just made a new bottom, a new low.
Right. New lows,
so I'd want to see one more kind of retest of that bottom on lower volume. And you could almost make the case, right? It's a stretch, but you could almost make the case that that low that we had on whatever, third or fourth, and on high volume, and the low we're having today on lower volume, you could kind of call that double bottom. It's a stretch. It's a very big stretch.
Okay. All right. So we spent the majority of our time here on the interview talking about crypto, and your recent appearance on CNBC, you know, a lot of conviction about 40–50% decline in the market over a longer period, about 3 years. So you know, you described, you know, the first year is going to be choppy down. And I know you also have a bias towards liking what's happening in Asia, that this is going to end up being their century. So is there anything that you would also do? I assume you're a dollar bear to,
you know,
with your own money. Would you go ahead?
I am a dollar bear. And I've been wrong this year, in the sense that, I mean, it's not a big move, but I would have thought, you know, at the beginning of the year, I think we were in the low 90s, and then we fell down to like 87, 88, and I was feeling pretty good. And now we zoomed back up to 97, and everybody's saying, "I'll say I told you so, I told you so." Well, we're still below. I
wasn't doing that.
I know. We're still below 103, where I think we peaked 2 years ago when the Fed started raising rates, because historically when the Fed raises, the dollar falls. So I'm compelled by the dollar shortage story, and I'm compelled by the challenges of foreign markets suffering when the Fed raises rates. But I still think the dollar's in a secular decline. That's a great chart right there. It's a great chart. So I think the dollar's in a secular decline. I think that, you know, we're going to see, you know, much lower lows, and I think it is the Asian century. So I'm pretty bullish on, and I was early, that's the euphemism for wrong, on A shares. So ASHR is something that I find really interesting today.
What is that? What is that? A WAN exposure? That's
an ETF. That's not renminbi. That's actually A shares. So the local shares in China. And I think what that's going to benefit from is two things. One, from what we understand, there's going to be a pretty significant stimulus package in terms of taxes in China starting on January 1st. And they're basically going to double the exemption for households, give people 5,000 renminbi to go out and spend on stuff. They're also going to let people write off mortgage interest and rent, which I think would be kind of interesting since they have a lot of renters.
Yeah.
But I think that's going to be a very interesting dynamic. I also think that, you know, when people look at this trade war, they think, you know, oh, you know, the U.S. is winning. The U.S. is not winning. It's not even playing the same game. China has been 2 steps ahead of us in everything they do. You look at, you know, we increased tariffs on Chinese goods. So what did they do? They weakened their currency exactly the same amount and totally offset. So their exports actually grew in the last 3 months, not fell. So they're playing a different game.
Anytime someone says they're not going to weaponize their currency, I look for them to weaponize it.
Exactly. So I do think, you know, the challenge for currency traders here is the dollar. If you look at its primary trading partners, the euro and the yen, all 3 of those currencies, I believe, are in a race to the bottom. And it's just going to be a rotation between who has to take the pain. So right now, the euro's taking the pain because a year ago, the euro got way too strong. And it probably has plunged Europe into recession, right? They had negative GDP last quarter. They probably have negative GDP this quarter. And so, that'll be a recession. Japan's already in a recession. Technically, they've had 2 negative quarters. So I think next comes our recession next year. And I think that's when the dollar will take its turn, having to devalue to try to stimulate growth. But
how about to save the market, just like you were talking about, Venezuela's stock market exploded on the collapse of their currency. I believe, Mark, that the Fed will sacrifice the dollar to generate a recovery in the stock market, even if it is in nominal terms, because that's their tax receipt machine.
100%. 100%. And look, it's the dictator playbook. And that's actually not a comment on our current administration. It's just we've never had higher wealth inequality and income inequality in the history of the United States. And that's just a fact. And why does that happen? It happens when the government, the elite, passes laws and rules that allow a minority of people to gather all the assets, and then they systematically devalue the currency for 2 reasons. One, because the only way out of massive debt, right? We're never going to pay back our debt. We're going to inflate it away. That's what governments do, and they've been doing it for millennia, not centuries or decades, but millennia.
Yeah, like the Romans took out more. First it was gold, silver, and then kept taking out the content of silver.
Exactly, and that's why we have ridges on our quarters, so you can't do that.
You know, that point you made about the elites and the income disparity is all you have to do is go down any street in America and find someone who's renting a home, who owned a home that's now renting a home from the people who bought it out of foreclosure from them.
Exactly.
What do you think?
I think that's a perfect example. I think there are so many examples. I mean, I was in the car on the way to do a CNBC hit last Friday. I was only in the car for 30 minutes. I heard 6 ads on the radio for debt relief, tax relief. I mean, every 5 minutes there was another ad for, if you owe the IRS $20,000, we can get it. Oh, there's a myth that you have to pay the credit card companies back. You don't. We'll help you. Yeah. Like, holy crud. That means we are right back to the depths of crisis. Everybody says this is the world's greatest economy. Are you kidding me? It's not even close.
Hey, I interviewed a guy from Greenwich who's a trader and hedge fund guy, and he said he's seen hedge fund guys at food banks. That even though we had a great bull run from 2008, these hedge fund guys are hurting too, and most of them have moved to Florida.
It's because, look, there's a difference between somebody who really starts with nothing. They don't have that much to lose. When you have a lot, and in particular when you lever, which was very easy to do. Everybody could buy a bigger house because they could get a no interest mortgage, or you could get a bigger car because you have to make payments for the first 6 months, or 0 interest. And everybody levered up, and leverage is a great tool when things are going up, but boy, it can bite really hard on the way down. And I think that's happening. And I don't think we're going to have the 2008 kind of calamity, because that was leverage in the financial system. I think where the leverage is today is in the consumer. And so the reason I think—
How about corporate debt?
I think corporate debt is really, really ugly, but so much of it doesn't have covenants that the banks aren't going to be able to actually do anything about it. If you loan somebody money and you don't have any rules
collateral
for that collateral, then you're kind of screwed. So I think what's going to happen is a whole bunch of zombie companies, the ones that are really, really over levered, they're going to go bust next year and the year after. And the reason I think it's going to play out over this 2000, 2001, 2002 cycle. So I think this year was 2000, right? We had the tech bubble, we had the correction. I think we're going to finish the year down single digit, losses. 2000 wasn't a big down year. It was only down 9%. 2001 recession hits. First quarter, they don't call it till September. I think same thing will happen next year. And that year wasn't even that bad, down 14%. The really bad year was 2002, when the debt bubble blew up. Enron, WorldCom, all the telecom companies. And I think that's going to happen. I think the shale companies are going to blow up. They're way over levered, and oil prices are going to be, I think, stubbornly low for a while because supply. Think about this number. In the last 12 months, U.S. domestic oil production is up 2 million barrels a day. 2 million on a base of 9. That is a monster growth. And people think, oh, Saudi Arabia caused oil prices to crash. No, they didn't. Texas caused oil prices to crash. Very simple.
Okay. And I think one other negative, Mark, I want to get your view on it. You know, the tax cut by Trump, all the corporate debt being taken on by, you know, high flyers. And with that money, instead of investing in the future, they used it for buybacks. So aren't they actually leveraging their own stock with buybacks? And as rates increase to roll over their debt that they use to do these financial engineering things, that could only exacerbate a decline.
No, look, this is the most heinous form of corporate kleptocracy I think we may have ever seen. Now, I wasn't around in the 1920s, and there might have been something worse back then, but this is so bad, and I believe it was completely orchestrated. And basically, here's the deal. The U.S. central bank is not allowed to buy equities by law, right? Japanese central bank can buy equities, Swiss national bank can buy equities, but the U.S. central bank was not allowed to. So what they said is, all right, fine, here's what we'll do. All right, companies, we'll give you a tax cut, but here's the deal. You can't actually use that money for anything except stock buybacks, basically stealth QE. And that way you'll keep the market up.
Okay.
And you can pay yourself in options and you can steal a lot of money from the shareholders.
Right.
And it is the biggest transfer of wealth by basically manipulating interest rates to low levels, allowing them to borrow money to buy back stock. I believe it's the biggest corporate theft in the history of the United States.
Mark, you're a watchman for the industry of people that are interested in the markets and trading. I want to continue to encourage you to do that, to go out and speak the truth as you see it, because I learned a lot from you today, and I want to say thank you for being here in our community. And, you know, people, you could follow Mark at Mark Yusko on Twitter, and his company is Morgan Creek Capital, and you could go to his website. And good luck with your bet on
thank you.
Bitcoin outperforming the S&Ps. I'd like to throw silver in there. Anyway, Mark.
I like the silver choice too. That's a good one.
All right, buddy. So really, thank you so much,
Thanks,
Mark.
Dale.
You and your family have a Merry Christmas and Happy New Year.
You too. We'll talk soon.
All right, buddy. All right, everyone. That's Mark Yusko. Hope you were edified by his appearance today. I know I was, and that's a wrap for Face. See everyone tomorrow. Remember, don't just count your pips, count your blessings. Oh, you're very welcome, Stephen. And we'll see everyone for our webinar tomorrow. So good hunting the rest of the day. Adios.